All right, ladies and gentlemen, I hope you had a wonderful day. It was actually a pretty calm day in the market. We had some minor swings back and forth. We were able to hold up this multi-day rally above the 200-day moving average, and things were generally calm, and you didn't get any crazy headlines. There was a couple things about tariffs. We're coming off of these positive rumors, but there was something that happened today that I want to go over, and honestly, this is not good for retail investors. And what I am talking about is obviously tariffs. Now, not what you think. This is not your normal doom and gloom on tariffs. What I am talking about is the education and understanding around this topic, because there is a lot of large gaps and uncertainty that is causing a lot of confusion. And long story short, the less that a majority of people understand, the more likely you are going to leave the ultimate decision up to Wall Street in the end. So what I'm talking about here is a little weird update that we got. We heard today that Goldman Sachs, they now think that the tariffs are going to be a lot larger than the market is forecasting. Now, you remember this chart? This is the PCE expectations from Goldman. So were they talking about this and the inflationary impact? No, they were not. And what they were talking about was the actual tariff rate and the overall average percentage of the tariff rate being charged. And now what I want you to see is that people and analysts in the market are debating this. So it's not just about, are tariffs good or bad? It's not about, do they cause inflation? The analysts in Wall Street, they are getting into the details. I don't know if you remember it. A couple of years ago, we went from following the non-farms and even the CPI, and it was all about the number and inflation, and then all of a sudden, it became about the unemployment rate. Then it became about the wages, and then these smaller factors started emerging. Well, it looks like we're starting to get that with tariffs, and like I'm saying, that's not good for retail, because that means when we get to Liberation Day on April 2nd, you might think it's going to be one thing, but let's say the market gets a majority of what people are expecting, but then that tariff rate or another factor about who the tariffs are affecting or what, or the rate, the amount, all sorts of factors. If we're leaving it up to Wall Street and there's not really a consensus in all of this uncertainty, that's going to leave for an interesting reaction. So we got a lot to talk about. I'm going to break down everything this far so you could really understand where we're at. We're going to talk a little bit about this week. I have the plays, the keys, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Walking to the couch, it's the joints on the legs. Live in the hills, but still get a spread. Started with a live, but still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, we already went over the tariffs, but another factor related to what's not good for the market right now, this weird uncertainty that we're getting and the gap between good and bad. And what I mean is quite simply this. We had data today, consumer confidence. It was actually so low, it would have triggered a recession signal in almost any other environment. But what this chart is showing you is the difference in light blue. Most of these are the soft data sets. And then right here, these are more of your hard data sets. And essentially, soft data is falling off a cliff. Hard data is either going up or staying really stable. This is why you have some people saying, oh my gosh, this is terrible, and some people saying this is nothing at all. This is why to some people this is a major dip, or maybe it's nothing at all as well. So that was another big thing beyond just that Goldman stuff, and to give you an idea of where you are at right now, because Liberation Day and the tariffs, that's really all that we got to look forward so far. This is where you are compared to Trump 1.0. So the bounce, the seasonality, all of that, it's all playing out so far almost exactly like last time. We're going to see where these next couple of days take us, and now how people are going to take April 2nd. So this is the final week of the quarter. By the end of this week, coming into Monday, that will be leading you into the tariff day. But I want you to understand some of the key points so far. Right now, it went from getting really freaked out and everybody was worried to over the weekend, we started to bounce a little bit on Friday and people were talking about the tariffs easing up. And coming in from Friday all the way till today, nobody has shot that down. And it seems like we actually will be getting a much more narrower reciprocal tariff and it will not be as bad as initially feared. That's the first big point. The second big point is that people think April 2nd, the tariff day, is going to be a clearing event, meaning that you're going to get the event risk off the table. Once it actually happens, just like the other times, then we could move on and start to see what the reality is actually going to be. So people are kind of viewing this as a good event, and that's why even comparing it here, if that really is, we get the tariffs, everything goes well, nothing bad materializes, that'll kind of play out how we did the first time we went around the first trade war. So I think that's a very interesting point because that is up for debate. Some people think April 2nd will be the start of more volatility. Some people think get over the event risk. It leads into the earnings. Everything goes well. Before you know it, you might get the second most hated rally. So that's a second big point. We're going to see how that plays out. Another one, everything you've just witnessed so far. A lot of trades really did front run ahead of Donald Trump. We were talking about that even right after the election leading into it. You saw the U.S. exceptionalist trade, and we talked about that. And remember, we talked about the humiliation trade and those names coming back. They did. And really, the last quarter or so, or mainly the last month, what you've really watched is the U.S. exceptionalist trade unwind. And you've gotten that out of the way. Some things haven't unwound fully, but now we're going to see if we get some level of reset moving forward after we get over all of these events and coming into the next quarter, earnings and all of that. So there is that. The next thing, the 200-day moving average, bounce or fail. That is the broad factor we've been talking about. I think you closed right above the 200-day. It's like 574, I believe, on the SPY. And we've been talking about it a lot, and I've even showed you on like static charts, but even throwing the 200-day on the E-Trade chart, you can see this is a very important level. The one time we actually tested it and broke under, you didn't hit a high all year, and any other time we kind of bounced off of it, a lot of big moves happen. So a lot of people are waiting for that, and that's why we want to see how all of this is going to develop. And then finally, once we get through Liberation Day and all of that, you are going to be staring right in the face of earnings, couple of big tech names in the banks, and now after all of this, even Mag 7 going nowhere for like 6-7 months, people are going to be looking for that to either gain leadership, or is that going to be a lot worse as we watch the dynamic shift throughout the rest of the year? But these are the main points, what we're at. We're looking for the narrower tariffs. We're looking to see April 2nd, more volatility or clearing. What happens now to the dollar in U.S. after everybody getting worried and even some of these develops in Europe? What happens at the 200-day? Do we see a new high of the year or not? And then how does that lead into earnings and the tech stocks leading? So we have a lot in store. I hope that kind of simplifies it, but this is why you don't really have too many more events, but you're kind of juggling all of that. So that's key number one. Key number two, the rest of the week, you don't really have much tomorrow. Durable goods, that'll be an interesting set of data, but GDP the next day, that'll be more important. And then PCE, these are going to be more of the harder sets of data. And the quarter end, that's where we're going to be getting the big money coming in from pensions and all of that other stuff. So really, we need to work out all of these factors that we're talking about here. And then Thursday, Friday, before you know it, you'll get a lot of weird swings and probably big volume because people are expecting, I think, the biggest pension buy since like the early 2000s or the 90s or something like that. But statistically, it's a lot of money. So there's been a lot of discounts, the moving averages, the breadth. We'll see how this all plays out, but that's going to kind of muddy the waters as well. And I think these Thursday, Friday, the events, the pension, we'll see where we're at, and then we will find out how we are leading into the weekend and what will Liberation Day bring. So that's all I have for you. We already gone over the data here, like I said in the beginning. We'll see where it all leads us, and I hope you're ready. But now, let us get into the plays. So, right off the bat. I got a couple of different plays in this one. I kind of whiffed on it, but I'm looking at Booz Allen, BAH. We made a flip on that a couple weeks ago. It worked out, but it was slow. Then defend, just the ETF in general of all these defense names. Why? I noticed a lot of activity both early in the day and later in the day. I wanted one of those LMT calls. It sold off after the Boeing thing. But remember, there's things going on from Europe to the other war stuff, and even it's not like the U.S. is stopping military spend. So I think some of them came down in the short term. You might be able to get a play here, but LMT was too expensive. Started shopping around, and that's why I was like, man, maybe even defend, but that thing is already kind of up a little bit. But going to be watching these, see if anything develops. Again, both contracts and what's going on with Europe and all that. It has been giving it some juice here and there. So keep that on watch. That is play number 1. Then play number 2. Netflix and Tesla. So you got to be careful. I don't know, maybe if we get any red days by the end of this week, wait for that pullback, or maybe you even got like one more week to burn. But what I want you to keep in mind, because I think a lot of people are forgetting it always, especially when we start dealing with a lot of volatility, Netflix and Tesla, these are the first ones to usually report. Now, they are big tech. There's a lot riding on them. I mean, Tesla, it's doing the little Tim Walls bounce. I don't know what to call it, but either way, these are going to be the first big names to report coming into April, so watch out for that. But the pre-earnings so far, they have not treated me too well, so maybe we want to be early, but not too early, but we'll see what happens. That is play number 2, and then finally, another little tip here on the SPY. I would love to remind you again, because today was another big day, and go for individual stocks instead of playing SPY, QQQ, or anything like that. When you notice that the premiums are still holding a major gain or decline from earlier in the week, that is that premium hangover. We woke up, contracts gapped up like 500 to 800% on Monday. Even then, this morning, some of them were up 20-40%, and then we did that back and forth move. It really wasn't the best day to flip. These are the only plays I pretty much lost on today was SPY plays. I got one that I'm holding in for tomorrow, but every individual name hit. I woke up to apples I held from yesterday. Those went up 30 to 50%. The Amazons kept going up. Any individual stock, there was actually some action there. And again, that rotation, this back and forth, especially with what we've seen so far, you really saw a different day today, because now it wasn't staples, it was the NASDAQ, and then everything else selling off. So if you notice there's a rotation day, indexes aren't going to be the move. Individual stocks, those can be your friends. So we'll see what we get tomorrow, whether or not it'll be headline driven or not. But like I'm saying, we got a lot of broad factors to choose from. Maybe individuals up until we get the clearing event. Maybe that'll be the answer till then. So we'll be watching the headlines. We'll be on stream. We'll see where it takes us. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, the man is like an animal, but no animal is like the man. Why? Man makes art. No animal has ever draw another animal, ever. A fish never drew a fish. You know that? If you go to the caveman only drew pictures. I'm telling you, my mind is blown. I don't know if you feel me. Please find it. Chad, go watch the Philo, but Chad, drink that water, stay hydrated, healthy, all that good stuff. I'll see you in the morning, and Horna.